Hi everyone, this is the video for the HSA scenario number 4, Carl and Monica Smith. So let's get started just by reading the interview notes. So we have Carl, age 46, and Monica, age 42, are married and will file a joint return. Great. They have 2 children, Adrian and Robert, whom they will claim as dependents on their joint return. Okay. Monica's cousin, Michael, age 29, came to live with them in July 2017. Michael's gross income was $4,300. Monica and Carl did not provide over one-half of Michael's support for the year, but did pay $600 of Michael's medical bills in November 2017. Carl was enrolled in an HDHP, which stands for High Deductible Health Plan, with family coverage. Carl has had an HSA for 4 years and has no other health insurance. In 2017, Carl made regular contributions to his HSA, totaling $4,000. In 2017, Carl took $1,800 from his HSA to pay the following medical expenses: $300 to purchase Monica's eyeglasses needed for medical reasons, $725 for long-term care insurance for Carl, $250 for over-the-counter eye medicine for their son, Robert, no prescription from doctor, $525 for Adrian's physical therapy sessions. And last bullet point, Carl, Monica, Adrian, Robert, and cousin Michael are all U.S. citizens and have valid Social Security numbers. Awesome. So let's get looking at what the questions are asking so that we know what to do. So question number 9. The adjustment to income on Form 1040, line 25 for Carl's HSA deduction is one of these. So in order to find out what his total HSA deduction is, I just fill out Form 8889. That's the only way I figured out how to do it, which is the health savings account form. And if you just fill out part 1, the bottom part will say HSA deduction to put on line Form 1040, line 25, which is what we're looking for. So let's fill out Form 8889 really fast and see what that should be. So we have Carl. His last name's Smith. Great. And I guess technically, since they're filing a joint return, it would be Carl and Monica Smith. We don't have their Social Security numbers, so I'm just going to leave that blank, but usually you would have it. In the instructions, it says that he wanted a family plan. Or that he has a family coverage right here. So here we would mark family instead of self-only. I already had it marked. My bad. And then line 2, HSA contributions you made for 2017 do not include employer contributions, etc. So let's go back and see what he contributed. It says Carl, in 2017, Carl made regular contributions to his HSA totaling $4,000. Great. So we'll put $4,000 right here. If you were under age 55 at the end of year 2017 and on the first day of every month during 2017 you were considered eligible with the same coverage, enter $3,400 or $6,750 for family coverage, which is what he has. All others, see instructions. So he was under age 55. As you can see here, he's only 46. He was eligible. You can look that up, but he had the same coverage. He was eligible all year. So let's put $6,750 because they have the family coverage. Enter the amount you and your employer contributed to your Archer MSAs for 2017 from Form 8853. If your spouse, etc. We don't have any of those forms. It doesn't say anything about him contributing to an Archer MSA, so we'll put 0. Subtract line 4 from line 3 if 0 or less, enter 0. So subtract 4 from line 3, that's just $6,750 still. Enter the amount from line 5, but if you and your spouse each have separate HSAs and had family coverage under HDHP at any time during 2017, see instructions. So in our interview notes, it just says that Carl has an HSA. It says nothing about Monica having an HSA. So even though they have a family account or like a family coverage, etc., it just says, but if you and your spouse. And we don't know anything about Monica. So we just know that Carl has one, so we're going to enter the amount from line 5. Then it says if you were age 55 or older at the end of 2017 married and you and your spouse had family coverage, enter the additional contribution amount. Well, Carl wasn't over age 55. We already know that from before. So we'll put 0. All right, line 8, add lines 6 and 7. Great. This is tricky, but we'll do 6750 plus 0. Line 9, employer contributions made to your HSA for 2017. We don't have any information on here about employer contributions, so we're just going to assume that it's 0. And we don't have a W-2 to show us, so just put 0 here. Qualified funding distributions. So I didn't know what this was, so I came to the publication 969 right here. And this is kind of like publication 4012 for the VITA stuff. It's kind of like the Bible of health savings accounts. And I just got this link from the slides that we sent out, just right here on slide, let's see, this is slide number 9. These are where all of these forms are coming from. So you can click on that, and then this will help you. So here it just shows all of it. It's pretty long, but I just looked up where it talked about the qualified funding, or what's it called again? Yeah, qualified HSA funding distributions. And I think, let's see, it's kind of hidden somewhere in here, but it is here. Maybe you guys saw that I passed it. I'm just going to look up funding. Cool. So this would have a bullet point, but it's easier for me to just look up funding. But qualified HSA funding distribution, I've already scanned through this, so you can pause this and read about it. But it says that it's a distribution that comes from your IRA. So either your simple or traditional IRA or your Roth IRA. It also says that this is something that is usually only done once in your lifetime. So this is really rare. And yeah, so it's most likely something that you'll never have to deal with, is my guess, because it can only happen once in their lifetime. And since the instructions say nothing about a qualified HSA funding distribution, nothing about his Roth IRA or traditional IRA, I'm just going to assume that this is 0. But these are questions that you'd want to ask your person. So add line 11, moving forward, add lines 9 and 10. So that's difficult. Line 0. Subtract line 11 from line 8. If 0 or less, enter 0. So line 11 from 8, we get 6750. And then line 13, which is our HSA deduction. This is the actual amount that we are looking for. It says enter the smaller of line 2 or line 12, and then this will be what is put on form 1040 line 25. So the smaller of line 2 or line 12, well, line 2 is 4,000, line 12 is 6750, so the smaller of the two is 4,000. So if we come to number 9, it says the adjustment to income on line 10 on form 1040 line 25 for Carl's HSA deduction is C 4,000. So that would be the answer to that one. All right, number 10. Whose qualified medical expenses can Carl include for HSA purposes? Great. Well, I mean, it talks about how there's Carl, there's Monica, and then their 2 dependents, Adrian and Robert, and then the cousin. So these are all people we need to think of. So I came to publication 969 again, and I scrolled to the top, and there's a part that talks about qualified medical expenses, and actually that will come in handy for question 11 too. But right here, after it talks about what a qualified medical expense is, right here it talks about qualified medical expenses are those incurred by the following persons, you and your spouse. Okay, so we know that Carl and Monica work. All dependents you claim on your tax return. So it says their 2 children, Adrian and Robert, whom they will claim as dependents on their joint return. So we know that Adrian and Robert also count. Any person you could have claimed as a dependent on your return, except that the person filed a joint return, the person had gross income of $40,050 or more, or you, your spouse, if filing jointly, could be claimed as a dependent on someone else's 2016. That should be 2017 return. This is an older publication, but all the rules are still applicable. And if they change, they write in there 2017 should be this. Okay, so this is where we need to think about Michael. So could we have, well, let's look at these first 3 bullet points first. So the person filed a joint return. Did Michael file a joint return? It doesn't say anything about that at all, so I'm going to assume no. And then it said the person had gross income of $40,050 or more. Well, let's come back to our interview notes. It says Michael's gross income was $4,300. Okay, so Michael doesn't pass that test, so we cannot claim his medical expenses as qualified medical expenses on the HSA. And then here, for bullet point C, you and your spouse, if filing jointly, could be claimed as dependent. That is not applicable to Carl and Monica. So here we know that Michael cannot be counted as the qualified medical expenses. So we just have Carl, Monica, Adrian, and Robert because it counts for you and your spouse and then any dependents on your return. Another thing, if you didn't have this, these extra 3 bullet points and it says any person you could have claimed as a dependent on your return, you would want to come to publication 4012 and do the dependency tree for Michael to see if he could be considered a qualifying relative. He wouldn't be their qualifying child since he's not the son or daughter, etc. But he could technically be a qualifying relative. But here in problem 3 it says the person's gross income for the year must be less than $40,050. So that would be a problem. Also, if you came down to number 4, it says you must provide more than half the person's total support for the year. In our instructions, it says that Monica and Carl did not provide over 1/2 of Michael's support for the year. So as you can see, Michael definitely is not a dependent or considered a dependent of Carl and Monica on their tax return. So those are different ways that you can look into that. Okay, so number 10 is C. Moving forward to number 11, on his Form 8889, Carl can include the $250 paid for Robert's over-the-counter eye medicine as qualifying medical expense for HSA purposes. So let's come back to the publication 969. And I'm already at this same place, the qualified medical expenses, which will tell us what everything is. So let's just kind of read through it. We have qualified medical expenses are those expenses that generally would qualify for the medical and dental expenses deduction. These are explained in publication 502, medical and dental expenses. They are also explained in our publication 4012 under the itemized deductions section. So I'm going to show you that just so that you are aware. Because if people are itemizing deductions, they can deduct some of their medical expenses. But there's specific ones that they can and can't, and there's a list in Schedule A, itemized deductions. Oh, I just found that from deductions, and then I came down. So if you click on that, right here, it says Schedule A, deductible and non-deductible medical expenses. So you can read through this whole thing to see what medical expenses would count, and then this one for non-deductible medical expenses. And if you look at the non-deductible, it says right here, health savings account payments for medical expenses. So if you have a health savings account, you can't deduct those for health savings account and for your itemized deduction. So it'll only let you do one or the other. Okay, so this is something that you would look through to see if they count as as qualified medical deductions for the health savings account. But then they also have a few of their own. So it says also non-prescription medicines other than insulin are not considered qualified medical expenses for HSA purposes. A medicine or drug will be qualified medical expense for HSA purposes only if the medicine or drug 1. requires prescription, 2. is available without a prescription, an over-the-counter medicine or drug, and you get a prescription for it, or 3 is insulin. Okay. So let's look at what we're talking about again. So on Form 8889, Carl can include the $250 paid for Robert's over-the-counter eye medicine. Okay, so I definitely remember reading about over-the-counter eye medicine, but up here it says that no prescription from doctor. So if we come back to our publication 969, here it says non-prescription medicines aren't considered qualified medical expenses. This says over-the-counter can be if you get a prescription for it, but Carl did not get a prescription for Robert. So Robert didn't have a prescription at all, so therefore it cannot be counted as a qualified medical expense. So the answer to number 11 is false. This is technically the end of that scenario, but I do want to go through and they talked about all of these distributions with the amount, so I'm just going to quickly kind of go above and beyond. You can stop this video now or you can look at it, but I'm going to finish out just really fast line 14A and 14C or B and just these parts on the distribution so that you can see what would be considered a qualified medical expense and not. So for 14A, we come here and it says his total distributions. It says Carl took an $1,800 from his HSA to pay the following medical expenses. So that's considered his total distribution. And again, we know that the $600 from Michael's medical bills can't be considered at all. And these 4 points are just for Carl, Monica, or the 2 kids. So these would all technically be distributions. So I'm going to put $1,800 right here. And then it says distributions included on line 14A that you rolled over to another HSA. We don't have any information about that, so there aren't any distributions that we rolled into another HSA. So subtract line 14B from 14A. We still have $1,800. Okay, qualified medical expenses paid using HSA distributions. See instructions. So instructions are pretty much what's in this publication 969. So let's just go through from what we've read in the publication 969. Let's see which ones of these would count. So $300 to purchase Monica's eyeglasses needed for medical reasons. I don't remember reading anything about that in the publication 969, but that could be considered a medical expense for an itemized deduction. So let's go into our this area again where it says what you can include. And if you scan on the you can include, it says special items, and eyeglasses are underneath that special item. So we can deduct the eyeglasses for Monica. So just kind of remember that we can deduct this $300. $725 for long-term care insurance for Carl. We didn't read anything about insurance, but let's come back to the publication 969 and see what it says about that. So if I just scroll down a little bit more from that same spot as in the qualified medical expenses part, it says insurance premiums. Perfect, that's what we want. It says you can't treat insurance premiums as qualified medical expenses unless the premiums are for 1. Long-term health care insurance, 2. Healthcare continuation coverage such as COBRA, 3. Healthcare coverage while receiving unemployment compensation, or 4. Medicare and other healthcare coverage if you were 65 or older. I'm not going to read this bottom part. So let's see. It says that the $725 for long-term care insurance for Carl. So it was long-term care insurance. So that said that you could deduct it if it was long-term insurance. So it says they can't be deducted unless the premiums are for long care insurance. So Carl's long care insurance does count. So we can use the $725 as a qualified medical expense. $250 for the over-the-counter eye medicine. We've already decided from question 11 that that wasn't considered a qualifying medical expense. So that does not count. And $525 for Adrian's physical therapy sessions. Again, it didn't say anything about that in publication 969, but it might be part of publication 4012. So I scanned through this and I found there's this bullet point that says hospital service fees, lab work, therapy, nursing services, surgery, etc. So therapy would count, the physical therapy would count under that therapy part of the hospital services fees. So that should be deductible because it's a normal medical expense that can be deducted as an itemized deduction. So the $525 would work. So let's add up what we have. We have $300 plus the $725. We do not count the $250, and we have $525. So their total qualified expenses were $1,550. So $1,550. Taxable HSA distributions. Subtract line 15 from line 14C. So I'm just going to hurry and do that. $250 which makes sense because that is the amount that wasn't a qualified medical expense from the eye medicine. So, we're on this. If any of the distributions meet this special 20% tax, I don't believe so I'm not going to check that. Additional tax, I guess I'd actually have to look that up. So I'm not sure. I would need to learn more about that rule. Technically, when you're using TaxSlayer Pro and doing this for a specific person, this might just automatically know, or you can just look it up, probably in this publication 969. In fact, I know you can. It's here. I think it's towards the bottom. I've definitely looked it up in here. Sorry that this is kind of confusing. Or you can just search. Yay! Additional tax. There is an additional 20% tax on the part of your distributions not used for qualified medical expenses. Figure the tax on Form 8889 and file it with your 1040. Exceptions. There is no additional tax on distributions made after the date you are disabled, reach 65, or die. So actually this exception, none of those happened for Carl or anyone in his family. And so everything that was not considered a qualified medical expense would have a 20% additional tax. So actually, yes, if any of the distributions meet they don't meet any of the exceptions, so that isn't checked. So then we multiply the distributions on line 26 by 20%, and that's the additional tax. Yep, so $50. So that's how you'd finish filling out this part. That isn't part of any of the questions in our scenario, but I just thought that might be helpful, especially since they gave us all of the information in order to fill out part 2 of Form 8889. So again, you can skip over this whole part, maybe you did, but we hope that you do well on this scenario on the test. Good luck. Let us know if you have any questions.